Hey guys, welcome back to Money Mondays. It's Anthony here from Just Married Money. So we talked about your credit score, and then we talked about your credit report. Now what happens when you get married? So this is when a lot of people start to get a little bit nervous because they don't know when we get married, does that mean that my spouse's or my partner's credit is going to affect my credit? I'm here to tell you that after you say I do, you can calm down a little bit because whatever happened before you got married, it stays separate. So if your partner has a lower score or if you have a lower score, you don't have to worry about that affecting your credit score, your credit report, because it's maintained separately. So after the wedding, if there's a name change for one of the partners, there's a myth out there that there's a loophole or that you're going to get, now there's going to be a new credit report in your new name, but that's not true. So what happens is your credit report is reflected based on your social security number. And there's actually a place on your credit report where it lists the names for any accounts that have been opened under your social security number. So there's just going to be some accounts that are under your old name and some accounts that are under your new name, but it'll still be reflected on your credit report. So what happens between spouses, between partners, when credit reports actually do matter? And that happens when you're married and you decide to apply jointly for a mortgage, a car, a credit card. When you apply jointly, then what happens is they look at both credit reports. And that's when it can affect you, because if one spouse has a credit report that's lower, then what happens is you're going to be charged higher fees and a higher interest rate than had you applied separately. So again, when you get married and your reports are separate, it doesn't hurt you if one partner's score is lower. It doesn't help you if one partner's score is higher. It's completely separate. It's only when you go to apply jointly. Now, things you can do, for example, if one partner's score is lower, is you can add that person as an authorized user to your credit card. Adding them as an authorized user, basically, it doesn't hurt your credit. It can only really help theirs as long as you keep making on-time payments. And if anything happens where you miss a payment, they can't go after your partner as an authorized user. They'd only be able to come after you since that credit is in your name. However, when you apply jointly, since both of your names are on there, then if a payment is missed, they can go out, the lender can go after both of you. So you want to be really careful, and this comes down to how you want to handle things, whether it's single or joint credit applications. Do you want to apply together and maybe pay a little bit higher in fees and interest rates? Or do you want to have one spouse, one partner that has the better credit report, better credit score? Do you want them to just apply for everything in their name? Or do you want to do a combination of both? I mean, it really comes down to what works best for you. There's no right or wrong answer. It just is whatever helps that marriage work harmoniously, and that is really the only advice I can give you, is what works best for you. So if you like what you saw here, I want you to subscribe to this YouTube channel and make sure you check out my blog at justmarriedmoney.com, where I talk about this very topic and other ones, many other ones, in great detail. So again, until the next Money Monday, have a good one, guys.